Okay, good morning, guys. This is Simon with Trade and Perform Coaching. Just getting started on doing the uh, setting up how the long setup in ES and NQ going into Friday morning's news dump that we had around 6:30 in the morning Central Time, and how we traded it, right? And how that process set up properly to be able to grab the longs and push. Okay, so again, this is primarily for the members in the room, but everyone's obviously welcome to follow along. There's something for everyone to learn here. Um, and so let's go to it. So first of all, if you remember yesterday, if you watched the video, which is on YouTube and on Twitter, if you looked and you saw that I highlighted how you could have grabbed the short to the you could have grabbed the short on process due to the trap, the long bull trap that rolled to the downside. But shorts are always more difficult than longs. That's kind of like a period and a sentence kind of thing, right? So the way that we go back is let's go back and see how the long setup. Now I want to talk a minute about how I have my chart set up. So I have the hour up top. I have the 15-minute in the middle and the 5-minute at the bottom because I don't know which one's going to clearly show me where the traps are. Sometimes in a faster market, I need the 15-minute. Sometimes in a slower market, I need the 5-minute, or I need the 5-minute for detail. So let's jump into it. So if we look in the morning, we're going to start with the S and then go to NQ. Okay. So if we look in the morning, I'm going to walk through the process, right? Both from a larger scale and then a smaller scale. So I'm going to, so I don't have to redo all this, and I can save it for later for trade reviews. I'm going to duplicate this chart. It'll take just a second. There we go. And then I'm going to erase all the lines. There we go. So if you look in the, so let's start overnight. So first of all, there's two areas for a trap to occur for me, and particularly on the hourlies. When I get these wicks are very important to me, okay? What the wicks tell me, and you have to put a definition in your head as to the information that they are giving you. What the wicks are telling you is that they tried to sell and then they found responsive buyers back up, okay? They tried to sell and then they tried to find responsive buyers back up. And one wick by itself does not necessarily mean a lot to me, but when I get 2 or 3 wicks in a row like this, I know that there are definitely buyers in an area. This is 3 hours of time where they tried to press lower and they had a response. Therefore, I'm going to put a line underneath the body of that chart if I'm trading at that time frame, or even if I'm coming in the morning. And now I'm going to have 2 levels. When I have 3 in a row like this, right? I know that literally, even when I have 2, that means they've spent 2 hours getting underneath. I know I have responsive buyers in this area, and I would highlight that area and go, hey, when we get down here, I would expect some kind of response. The next step in that process is now I have 2 locations, a grade A and a grade B location. This green area right here represents a grade B location. Why? It's a grade B location because the best odds of me getting a trade that will pay me a lot of money would require a close underneath like we got right here at 6 a.m. and then a trap back into this low. Now, if you look on the hourly, right, you'd be like, wait a minute, the bottom of that level, like if you set that up, particularly if you're day trading and you don't have a ton of capital, right, you'd go, well, wait a minute. The bottom of that is 58.47. The close back in on this bar is 58.59, and I don't want to trade with a 12-point stop to start with, and I would agree with that 100%. So the first part, I want to go look at how the trades responded in early Asia, and then I want to look how these trades responded between 6 a.m. and 8 a.m. going into Thursday, right? And then, but before I do that, I want to follow the continuation, right? What we can see here is that once this trapped on Thursday morning, right? We came down, we closed underneath, we trapped. And then the first thing you're going to look at is, well, where would be my target? So I have to do this slowly so that everyone understands and it doesn't get confusing. My target is always where the wicks were on the other side. So see how we couldn't get a closing higher than this? That was the highest close. This is the highest close. So however I'm entering the trade on the other side, my target is always going to be where the highest possible close followed by a wick was, right? That's going to be my first target. So if I had entered 58, 58.57, the close of that hourly, right? My target would have been 58.70, which would have been 13 points. But I'm going to slow this down now. And I'm going to go to ES and show you how I would have modified this entry. So now I'm going to take this entry and I'm going to go to the 15-minute. Same day coming into that Thursday. Okay, so there's my lines. And let me make sure these lines are getting drawn properly. So that's chart number 20, F5, chart drawings. Oops, didn't quite hit that. There we go. 20. Okay. There we are. So there we go. So this is where we're looking. So what you will notice, right? What you will notice is that there was two levels here, right? So the first thing I'm going to point out is this, and I know I'm stumbling through this because when you do this when the market's not open, you don't have everything side by side, and it's harder to make it make sense because you can't see it in real time. So here's where we're looking. I'll put a line there. We are looking here, right? Okay, that is where we're looking. We'll change the color so we don't get confused. Okay, and so we need further or more information, right? So we have a couple of pieces of information when we look to the left here. The first thing we know is that this was one of the last swing lows right here. So from a 15-minute perspective, I would have had a line going right here to here, like a little zone to begin with, right? Secondly, I would have said, okay, once we close, so I'm taking the same process I'm doing on the hourly and I'm shifting it down to the 15 minutes. Once I've closed behind here, I already know that I'm looking for a long, okay? As soon as I close underneath this level right here, I know that I am looking for a long. So I'm combining time frames, right? Because I'm a day trader, so I can do micro levels. And what I'm trying to accomplish as a day trader is going, which level is more valuable? So hourly levels are more valuable than 15-minute levels. 15-minute levels are more valuable than 5-minute levels. But I need those micro levels to see where the trap is going so that I can control risk. Very, very important idea and concept, okay? So as I come in, I'm going to look at this chart. So this is not the last step, right? And I'm going to go, oh, I'm underneath 58.70. That was my little white zone right here back to the left. And now I'm going to go on my 15-minute. Even more importantly, I've closed below. So this is important. This is what's called a stop sweep, okay? If you think about it, if you were long, say from here, or if you were long from here, where are you going to place your stop? Right here. This bar, that gray bar right there, took all the stops. That's very, very important to remember. So now what we want to ask is a very basic, fundamental question. We know that it reversed. It reversed from 58.46, and it rotated back to 58.76. That is a great trade. That is 30 points, 30 ES points. Most people would kill for 30 ES points. It's $500 every 10 points, $1,500, right? So what does that look like? So if you come over here, we're going to move this chart over. We're on 522. right? This is our area right here. This here, I'm going to make this wider so we can see it. It's right there. It's that white line. Okay. Now, what am I looking for in this bar? Okay, what am I looking for? So there's two things that I am looking for in this. There's just the basic idea of the basic trap. This is an 8-tick Renko, right? What I want more than anything else is for my algos to fire like these green bars. I don't get that at this turn. What I have is a white bar stuffed. So what is the white bar telling me? What is the white algo telling me? This white algo is telling me that I have a very strong bid push into the low. All the volume in that bar is on the bid. I have a very specific formula for calculating that. No, I won't share it. But that's what that white bar is telling me, that they pressed very hard into that low. Okay? So when we reverse, so you'll notice the yellow line is where the point of control is. The point of control shifts up on that bar, closes above the very hard push, and then the next step that I need, see that white line? That's where that trap occurs from the 60-minute and from the 15-minute perspective here. This is the 60-minute. I have no idea where I moved that 15-minute. Let's see if I can find it. There we go. From a 15-minute perspective, it's 58.35. So I want you to notice, what I need is a close below, and then a close back into a prior bar, right? So on the hourly, I need to close back into that 58.48, okay? From a 15-minute perspective, right? From a 15-minute perspective, I need to close back into 58.47, okay? And really, it's that 57.47, 58.48 that's the important area. I know I'm taking my time to walk through this, but I want everyone to realize that when you get that algo underneath, it's important to realize at this point that stops are getting taken, and then bears are looking at this. Look, they're going left shoulder, right shoulder, and they're going, oh, the head and shoulders is busted. We're going lower, and people are shorting on this break right here. So then what happens? We get the stuff, white bar stuffed, comes back up, right? Traps back in on this bar. This is on an 8-tick. This is the trap back in, okay? Your entry was on this bar when you got the point of control to shift over the white bar. These guys were trapped, right? Now look at the process of how it works to the right. You were now trapped. They try to bust that head and shoulders, right? Now look at your longs on the turn. Green bar on the turn. Green bar on the turn. This trade is worth approximately a 58.56 to 58.65, 9 points. And this one is a 58.50, a 1-bar stop, and rips all the way up to 58.85. Okay? So, two things. Number one, those are the only two trades you need all day to make a ton of money. Let's be like brutally clear about that. If you have even just two contracts, you take a scale on one and push the other, or if you have three contracts and you do something like a 3-5-7 scale, right? So if you do a 3-5-7, that's 350 plus 250, 600 plus another 150. So on each trade, you would have picked up $750 to $800 I'm going to skip around on the math a little bit, right? And each of those set up on process. But the way this worked is that you knew you already had a trap off a 1-hour time frame, and that extension was possible. How did I figure out that that extension would be profitable, or how would I figure out that extension is possible? I come back and I look at my 1-hour chart, right, which is right here. And I'm going to say, look, I should be able to get to the other end of this range on this trap. This is what it looks like on a 1-hour. Close in, close back in, backside test, and rip to the upside. That's the morning. That is the morning trade right there. And if you'll notice within the 1-hour concept, right? See how they closed above? Now all these sellers that won here, so you have to think of it strategically. Sellers sold here and they won, right? When we get this, when we got a close above on a smaller time frame, the weakest of those shorts got squeezed out, right? And then you can see on this bar, this at 1 o'clock, they got trapped back in. You'll then see it came back up to the top. This is a head and shoulders now. See this head, right shoulder. So see how that right shoulder held? And it's very difficult to see that right shoulder unless you're looking at a higher time frame. The other component for that, so that you get a sense of timing of how long it can take. This was at 1 o'clock, and this from this point until you got the large rollover, right? So everyone thinks, wow, I could have really just made a ton of money here, right? This whole trade sat here and ranged from 58.70 to roughly 58.46, back to 58.70, and then flush. So for most retail traders, not all, and particularly when you're trading size, there's two components. There's a time component. This trap occurred at approximately 1 o'clock in the afternoon, and it took all the way until 6 in the morning to get the roll. So you're already talking about 12 hours at least, right? 1 to 1, and then another 4 hours before you got this flush. Not so easy, right? And you had multiple opportunities to get long. And let me explain what I mean by that as I'm rolling this trade along over and over and over again, right? See this here at 1800? This first close right here. We're going to erase these lines. Okay? I prefer to trade long, especially in the market we're currently in. Okay? So see that right there? This bar, we're going to change it so I can show you in inch by inch detail. I'm going to put a line here and go, hey guys, if I'm running the room in the middle of the night, I'm going to go, we cannot get a close. We cannot get a close underneath 58, 57.50. These exact same techniques apply whether you're trading gold, euro. It doesn't matter what product you're trading really. The concept is the same. Okay? So I can tell from these wicks that when we get below 58, 57.50, okay, that there are buyers there, right? Now, could it flush at any time? Sure it could, right? There's a prime example. So that is why I need to rely on my algos, right? So I know at 1800, which is 6 p.m. my time, we have closed below, right? And so the first question I want to ask is I want to go to the exact same 15-minute chart. There's the line, and I can see on the 15-minute chart at the exact same time, we've closed below on the 15 minutes. There's my wicks. I see that, and I can just visually see this. This is a part that I see when I'm coaching people. They just don't see this. You should be saying, oh, there's buyers here. Oh, there's buyers here. That's what that wick is telling you. And what you'll start to see is these wicks match up. There was a seller here. He got beaten. The seller turned buyer. But just by itself, even if you don't have an opposing wick, you know there's buyers lurking back here, right? So at 1800, I then want to come over to my chart, right, and see what that looks like at 1800. So I'm going to go to 1800. It's that green line right there. 58.53. See how I close again down at 1751. Notice how many times it's a white bar with a line down. As a matter of fact, let me make it bigger so you can see the point of control, because it almost always involves a POC shift. Dun, 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 dun. Let's see where we are. There we go. Settings. Okay, there we go. So the yellow lines are the point of control. You can see the POC shift. You can see the clear close on the underneath from both the 1 hour and the 15 minutes. This is your speculative entry, right? And now when I look at this, even on a 24 tick, right, I don't have to solely rely on the 50 minutes, the 5 minutes. I needed that to see where the line break was coming from, right? But even here, I can see I got the break. So I'm going to step it through again slowly. Entry, stop, trap. Now what am I shooting for? The other side of the range. Now, if you'll look, this was the 1 hour pre-market IB low, right? It makes a pretty good target. If you look up from your entry, which was 58, 54, 50, this is speculative, so you understand that it can get stopped. This is the trap I now do not want a close below, right? This is now a run from 58.54 to 58.67 in Asia. I took that same trade in NQ, right? So again, 58.54 to 58.66 is 12 points or $600 a contract. It's a great trade. One contract, $600, right? So there you are on the what the trap looked like, right? Now I know two things, right? I know that there's a buyer here, right? So the next thing I want, even if I don't have a 15-minute chart, right? Even if I don't have a 15-minute or 5-minute, some people have a difficult time going, what does it look like on a 1 hour, a 15-minute, and a 5-minute? Well, it's kind of like looking at it's kind of like looking in a house that you know is lived in, right? If you look at the house and you're just looking at the front door and you know people live there, you may say that, oh, I know that house is filled with furniture because those people have been living there for a long time. And you would have very low odds of being in a family neighborhood of finding a house that's been lived in for a long time that has no furniture, okay? It's the same thing here. I know even though I can't see them from the actual content, I know that there's a pattern that repeats. And the pattern that repeats is I get this white bar with a yellow dot down and it gets stuffed. Team members, this will be on the Trader Assist, will be algoed. We'll break a swing and we will take this trade to the long side, okay? Just so you know that's coming. Hopefully we can get that done this weekend, but we're doing our best to get that finished. So here's the bar. This POC break takes a long time, but you get the green bar up anyways, which is, if in lieu of the green bar, you need the POC shift, but it's the same pattern over and over again. You get the white bar after the break, traps. This is the fuel. These are bearish sellers, right? Everyone went, oh, look, we broke the low, we're going to flush. These guys trap themselves. They are now, this bar closes us back in with that algo, which is exactly, by the way, when I say, hey, I'm looking to close that barrier with an algo, this is where you can add to your trade because this is entry 1. This becomes entry 2 with a stop right here. That's how you really turbocharge that trade. And then off to the lift. And then just like over here where I would have said once you have this trap, you can take these green bar traps. Over here, right, what I wanted above, right, what I wanted above is a green bar to the upside. Once I've trapped above, I want the green bar to the upside. I'm going to just give me just 1 second, guys. Is that gentleman here? Okay, I'll be right up there. Thank you. Okay, guys, so I'm going to leave off here. This will be part 1 and this will be part 2. But what I want to leave off with, right, is that from this point, right, see this right here at 1 a.m., this is going to leave a wick on my 15 minutes, maybe my 5-minute, and certainly my 1 hour. It's going to leave a wick behind. So see this at 1 in the morning. I know when I get this V shape here, it's going to leave a wick, and that therefore I can probably take that algo that fires right there to the right with a 1 bar stop. And so when I go look at that, right, and I come to 4:30 in the morning on my 15-minute, right? So here's the, okay, so here's the first trade. See how it leaves a wick? And so I'm going to highlight that. And what I'm trying to show you guys with the algo, whether you're manually trading it or using the Trader Assist, if you will look for where these wicks appear, one of the ways I'm really gaining massive edge is by trading where these wicks are and looking for the algos to fire within them or to get a physical close underneath and pop back in. I will cover Friday's trades in just a couple.